Hello, dear investors and traders. My name is Kate Zatakovenko. This is Global Investment Academy channel. And today we are going to talk about difference between trading and investing. Who are you, trader, investor, or both? What's the difference? Watch this video to find out. But before that, like it and subscribe to our channel. Okay, let's go. So what is the difference between trading and investing? Is there any difference? So trading is from the verb to trade. Everybody trade on a stock market. Let's start from traders. Who is trader? Trader is a person who prefers active trading. It means that usually it happens during the day or probably during some short period of time. It means that you buy and sell, let's say during the day. It will be day trading. If you're a day trader, usually these kind of people do not learn fundamentals of the companies. They do not read financials because it's obvious it takes a long period of time. It takes much studying this process. Usually traders base their decisions on technical analysis. Usually they say that traders have a motto like buy cheap, sell high. Traders trade during the day. There is scalping and it's many orders during the day. Swing trading, it's trading on a price movement. So usually traders base their decision on technical analysis. They enter a position when it's somewhere low and they close the position when it gets the certain level. But what if the position does not go the way they expect it to? Usually traders does not study fundamentals. That's why they could make a mistake like entering a company of not very good quality. What happens then? They can get stuck into their asset position when it goes low and low, and they wait and wait till it gets better and goes eventually goes up, but it could take a long period of time. And there is a joke that such kind of traders become long-term investors because they can get stuck in bad quality companies. What are the pluses of trading? You can start with little sum of money and you can gain some profit in a very short period of time, like in a day frame or probably week, months, and you can gain a lot, like 50, 100, 200 or even 300% from one order. That's possible. Yet we all know that the percent of profit, it equals risks. It means that you can gain a lot, but you can also lose a lot of money, like again in a day frame or probably in a month or so. So it's very risky. The other disadvantage is that it takes a lot of time. Actually, trading is a job. It's not a game that you play once in a while. It's like a regular job. You have to be in front of your computer all the time. You have to follow the candles or bars, to follow the probably entering position or closing position. So you have to be active all the time. What else? So usually, not always, but usually traders does not know fundamental analysis really well because it's hard and it takes a lot of time. What about if you're opening like 10-15 positions a day? Do you need to follow and know all the fundamentals of all these companies? It takes like a giant amount of time. So that's why traders usually base their decisions on technical analysis. That's all. But technical analysis does not tell you everything. It tells you when to enter, indicators, but it cannot tell you what happened like 10 years ago or probably a month ago when the company fell. It doesn't tell you the reason. Probably it was some kind of mistake in the management, or probably something bad happening in the industry or in the market in whole. It just shows you the result. That's all. You do not understand the reasons behind this analysis. That's why long-term investors always use fundamentals, and they study financials really carefully and in details. So who is long-term investor? This is a person, again, who wants to make as much money as he or she possibly can, but not today, tomorrow, or in a month. They know that they put their money somewhere in some company for a long period of time, and they get this money somewhere in their retirement, or probably sooner yet. Why they know why they pick this company, what happens inside the company, what happens in the industry, because they studied fundamentals again. Yes, it's very important for long-term investing. And so let's try to remember, do you know any famous traders, like traders who work during the day and they make these huge sums of money? Do you know any famous traders? Nobody comes to mind, but let's remember one famous long-term investor. Everybody knows this name, right? So long-term investment, it's not a lottery, it's not a casino. It's work, but it takes time and studying at the beginning. So you need to carefully analyze the company, the industry, probably the market in whole in that particular period of time. But you do know where you invest in. Not because of technical analysis. You do know the favorable place to enter, but yet you know all the technicals. You know all the fundamentals of this particular company as well. So what are the disadvantages of being a long-term investor? Well, as I said, you don't get your money back really quickly. You know that you're investing for a long period of time, but you will get your money back actually, and with quite a percent back. But the risks are not so high. So what does investor do when your stock or your position goes low, like it fell? What does investor do? Probably nothing, or a long-term investor could even average their position, so buying more of this particular stock, because they know that quality is still good, and they know their position well, and they know that the problem is temporary, or probably just the market in whole. The market fell, that's why they average their position and stay calm or do nothing. But if you're trading and unexpectedly your position drops, probably there is a panic attack, or what should you do? You're losing money. It's very nerve-wracking actually. So being long-term investor, at the beginning it takes more time, and probably it takes a little bit more money to invest in different companies. But again, you can start with little. So you can buy like one stock of this company, two stocks of this company. Yes, you cannot buy 100 stocks of Amazon at the beginning. Probably some people can, but in general. I mean that playing long is, let's say, staying on a safe side more. If you don't want to get nervous all the time your company drops, you should be long-term investor. How to be long-term investor? Study fundamentals. You can study in Global Investment Academy. Actually, the course starting somewhere soon. You can check the curriculum. You can learn everything from the very beginning. Even if you don't know anything, it's okay. So who to be, trader or investor, it's only for you to decide. But the good news is probably you don't even need to decide. Their golden recipe, I would say, is to keep about 80 of your deposit in a long-term investing in good quality companies. And if you want something spicy, some probably something active trading, you can trade, you can use option trading, but again, I would suggest you to study fundamentals first to be value investor option trader, probably. So to get into trading positions with a little of your deposit. That's, I guess, the basic rules of investing. So that was the main difference between trading and investing. I hope it was useful. If you have any questions, please leave them in the comment below. Probably you want to know something about fundamentals, so technical analysis or financials. There will be more useful videos where you can study everything and learn a lot with Global Investment Academy. Please subscribe to our channel, like this video, leave your comments. Thank you very much for watching. Stay tuned. Bye bye.